Last week, Intel dropped 5% on the news that NVIDIA was going to be entering the PC chip marketplace. Then, 48 hours later, it closed at an all-time high. When a stock ignores bad news and hits a price that it's never seen in its entire history, the market is telling you something important. Guys, today I am going to be breaking down what that signal actually means. And in the final section, somewhere around minute 7 or 8, we will be walking through the exact options trade that I am building when a stock I like suddenly finds itself at all-time highs. Guys, the software we are going to be using today is TastyTrade and Thinkorswim. I have links to the free downloads down in the description. But now we're going to talk about Thursday, right? To understand this, we have to go all the way back to January of 2026 and look at where Intel started. Intel started the year around $36.90. Not 136, not 236, $36.90. The stock had been cut by more than half over the previous 2 years, and the CEO had been pushed out. NVIDIA was dominating AI, and AMD was just eating their lunch. TSMC owned the manufacturing conversation as well, and the market had already reached the conclusion on Intel. This was yesterday's old news. And that's exactly why this move became possible. So the first crack in that narrative appeared at Computex back in May. Intel stopped presenting itself as a PC company and started presenting itself as an AI infrastructure company. The messaging changed. Xeon 6 processors for data centers, the 18A manufacturing process and edge AI deployments, industrial AI partnerships with Foxconn and Hitachi. Suddenly investors weren't looking at Intel's past. They were looking at what Intel might become. Then the catalyst arrived, right? In early June, Google committed to purchasing 3 million AI chips from Intel Foundry. Not TSMC, not Samsung, Intel. Production isn't scheduled until 2028, but that wasn't the point. The point was validation. Google effectively told the market it believed Intel's 18A manufacturing roadmap was credible, and the stock jumped 11% in a single day. Then another headline appeared. Reports surfaced that Apple was exploring future foundry relationships with Intel. And around the same time, Wall Street started changing its tune. Wells Fargo upgraded them. Barclays upgraded them. Mizuho raised their targets. And analysts who had spent years downgrading Intel started moving towards buy ratings. Short sellers started having to cover. Momentum traders piled in, and the result was one of the biggest reversals in the market. From $36.90 in January to roughly $130 by June. Guys, that is a 250% move in 5 months. So then came Tuesday. NVIDIA announced an aggressive push into Windows laptop processors. And that matters because laptops, that's Intel's territory, baby. For decades, the PC and CPU business has been one of Intel's most reliable profit engines. Hundreds of millions of chips shipped every single year. They have consistent margins, consistent business, the cash flow helping to fund the company's broader turnaround. So when NVIDIA, the king of the GPUs, said they are coming after that market, Intel immediately dropped 5%. And we can go back at the chart and take a look at that drop. That was right here, all the way over to the right. Boom, it dropped 5% on that news. And honestly, to me, this reaction made sense. Because even if you're bullish on the foundry story, that future isn't generating meaningful revenue today. The PC business is. So bears immediately pointed to the move and said, this is exactly the problem. Google's deal is for 2028. The Apple story isn't confirmed. The foundry thesis still needs execution. And now the one business generating cash today is facing a direct challenge from the largest company in the world, NVIDIA, at probably over $5 trillion. That's a legitimate argument, not a straw man. It's not irrational. But here's the interesting part. The market only believed it for about 2 days. Because by Thursday, Intel wasn't merely recovering, it was making history. All-time highs. Not a bounce, not a relief rally, an all-time high. The highest price Intel has ever traded at as a public company. And when markets do something that dramatic, I pay attention. Because price is the final vote. And here's what I think the market was saying, guys. First, NVIDIA's laptop ambitions are real, But entering a market and owning a market are two very different things. Intel already has Lunar Lake and Arrow Lake in the market. This isn't a winner-take-all battle that's resolved in one quarter. It's a multi-year competitive fight. Second, and more importantly, Intel is no longer being valued primarily as a PC company. That's the shift. The market isn't pricing Intel based on laptop processors. The market is pricing Intel as the only credible Western alternative to Taiwan Semiconductor. A foundry story, a manufacturing story, a geopolitical story. The Google commitment here matters. The potential Apple relationship matters. The CHIPS Act matters. Governments in the US and Europe want domestic semiconductor capacity. That tailwind isn't theoretical, it's real. And once you view Intel through that lens, Tuesday's sell-off looks very different. It looks less like a thesis break and more like a temporary misunderstanding. The market spent 48 hours debating the wrong risk. Then the buyer stepped right back in and Intel closed at an all-time high. So now let's talk about the trade. And for this, guys, we are going to pull up TastyTrade to look at the options trade. If you've never used TastyTrade, it is the premier options trading platform on all of the internet, right? Go ahead and download it for free. I have a link down in the description. Whenever a stock I like closes at an all-time high, I ask myself a simple question. Do I need this stock to keep going higher? In this case, the answer is no. And that's why I'm looking at selling some premium instead of directional calls. So the setup is pretty straightforward. And guys, I have TastyTrade open right now. And whenever we see a stock experience a volatile week, a 5% sell-off, followed by an all-time high, the volatility pushes implied volatility higher, which we can see right here. Intel has an 88.4 IV rank on the TastyTrade platform. And we consider 30 to be high. So higher implied volatility means we can get richer option premiums. And when premiums get rich, sellers have an advantage. And that's where what I'm going to recommend for this one is an iron condor. That's where this comes in. So an iron condor combines a bull put spread and a bear call spread into a single defined risk position. We'll be collecting premium from both sides, betting that the stock will stay range bound. So what we're going to be looking at here, guys, is this iron condor setup. I'm going to go out actually to the July time frame, 27 days to expiration. I really do not want to go over earnings. I've gotten burned on a few of these AI names just thinking that they are going to stop running and all they do is keep going up. Okay, so I'm going to do defined risk on this. I think Intel maybe has hit some kind of limit because if you look back at the chart, like let me just pull up the chart again on Thinkorswim. So I pulled this 4-hour chart back up and we can see right here that back on May 11th we hit 131.05 and then we slightly broke through that to 135.48 and then we closed back at 133.99 on Thursday. Okay, so this is, I mean, we did break through this swing high back here. I just don't see this breaking out to like another leg up before earnings, and earnings are just after the July expiration. So if we go back to TastyTrade, this is why we're going to just go out to July 17th because Intel has earnings on the 23rd and I don't want to trade this thing over earnings. I'm going to put on an iron condor. So what the trade that I found, and guys, this is not financial advice. Okay, this is for education and entertainment purposes only. You need to trade according to your own risk profile. But this is what I'm doing and how I'm looking at this thing. I don't think Intel's going to drop. Right? If it was going to drop, it would have kept on dropping. Instead, it jumped up to new all-time highs. So I'm going to be selling the 110 and buying the 105 on the put side. On the call side, I'm going to sell the 160 and buy the 165. So I've got a $500 defined risk and I'm collecting $1.87. And when I do this, I want to make sure I'm collecting at least 1/3 the width of the strikes. Okay, so if we take, if you do 500 divided by 3, we want to be able to collect at least $1.66 on this trade. And I'm collecting $1.87, so it fits within the parameters of what I'm willing to risk and the risk reward ratio. So if we go back out to Thinkorswim and see how this looks on the chart, what I like to do is I like to take my price levels on the chart and I just drop them to where my iron condor is going to be. And we said 160, 165, so we're right here. And then the put strike was 110. So this is our range. I'm going to jump out to the daily. instead of the 4-hour. Okay, so we want to stay within this range, right? 160 down to 110. And now just to validate it, right, just before I actually commit to this, what I'm going to do is draw some Fibonacci lines to see if anything lines up with that might provide me, you know, some sort of artificial support or resistance on this trade. So I'm going to start from this swing high over here on May 11th at about 132, and I'm going to go down to this swing low. Okay, so we can see we will run into a 1272 at 142.01, and then looks like I'm missing a line here. Let's pull this back on. This 1618 is missing, and then the 1618 is at 153. So I've got two Fibonacci levels to the upside that could provide some sort of resistance or maybe act as price targets, and then pull back off of that. We see that all the time. As far as to the downside, I'm going to draw another Fibonacci line. I'm going to go from this swing low up to this swing high, and I might have to zoom in here to kind of see those and maybe delete this other one. We'll get rid of this one here so we can just see it, and I'll just go to the 30-minute chart. Okay, so from this prior swing, which is down here at 98 up to 135, we see the 382 retracement is 121, the 50% retracement is 117, and the 618 retracement is at 112. Okay, so we've got 1, 2, 3 Fibonacci lines above our put strike. Okay, so that also gives us some artificial support to the downside. So this iron condor looks good. Again, let's pull open TastyTrade. We're sitting 27 days to expiration, and also, guys, the IV is at 88.4. If the market has time to digest this news and the stock maybe just trades sideways for a little bit, we could just see the IV crush come down, and maybe we can get out of this trade for 20 to 30% profit. You know, maybe make a quick 50 to 75 bucks, get in, get out, make our money, play the IV crush, and make a little money on the news of NVIDIA entering the computer chip market, Intel selling off and then bouncing back to all-time highs, and just look for that that IV contraction and make some money on that. So here's the final takeaway, guys. The most important thing that happened this week wasn't Tuesday's sell-off. It was Thursday's response. The market had every opportunity to panic about the NVIDIA news. Instead, buyers pushed Intel to an all-time high. That's a signal. It tells me investors are focused on the foundry story, the Google validation, the potential Apple relationship, and the geopolitical value of a Western manufacturing alternative. The NVIDIA threat is real, but right now, it's not the primary driver of the stock. For options traders, that's exactly the type of environment I like. Elevated implied volatility, defined risk structures, and a stock that doesn't need to keep rallying for the trade to work. My name is Luke, and this is the Option Bomb. Please hit like, hit subscribe. Every week, guys, we break down stocks and stories just like this. We cover the news, the earning reports, the headlines, and we take the real stories and translate them into real options trades. Again, guys, this is Luke with the Option Bomb, and I'll see you in the next one.